We have completed some syllabus topics with you all. Last week we have completed uh, foreign exchange transaction, foreign exchange transaction. So basically, examiner has tested one or twice, one or twice, and he has never tested after that on foreign exchange. So basically, uh, we have completed whatever the requirement for your exam, and we will be taking some questions with you later when we complete when we complete the syllabus, and when we start the question and answer session. So I have the paper with me, recent paper, that is 2021 latest paper, right? 2020 March September combined paper, recently concluded paper. So if you have gone through this question paper and the syllabus areas we have covered up to now, you can answer this question paper. So basically, we are left with only one or two syllabus topics. So basically, we will be starting today mergers and acquisition, then the capital restructuring. So then I'll have to give you one or two handouts for you to read. So basically, and we are almost finished. Your syllabus covered it. So then we can start the questions. Questions basically, now this question paper, there are questions taken from other exams as well. So basically, that's why I told you financial market operation paper questions also will be covering with you all. So that is also important for you all. And if you go through this question paper, there are, this is the latest paper. This was the paper after 2020. We didn't have any exam. 2019 September was the last paper. After that, this is the paper. So same question paper structure. Structure has not been changed. 8 questions, and first question 10 sub questions and 2 mark each. Question 1 is compulsory question. Balance 7 questions are optional. So you have been given 7 optional questions, out of which any 4 should be answered. So the 4 questions from essay type has to be selected out of 7, and first question is compulsory. First question is compulsory. So basically, if you go through this question paper, and you will realize the amount we have done so far with you all, and the answer in this question. Now see, now actually we have we have wasted a complete 1 year. Last year 2020 there was no any exam. So this was the first exam of 2019 September. So the exam paper was not changed, and they are actually confined to the syllabus. They have not tested anything out of the syllabus. So they have actually given some concession to the students. So basically, it means if you have thorough with the syllabus content, what we are doing in the class, more than enough for you to pass this exam. So, and if you have the question paper, please take it and see later. And question number 6 and question number 7, question number 8, those are very lengthy questions. Now I'll show it to you. I don't know whether you can see this. This is question number 6. This is question number 6, right? It's a lengthy question, but if you read this question, answer is only 1 or 2 sentences. Don't be misled by the number of words, number of sentences in the question. So nothing. So this is a story actually given in the exam. This question actually given the stories. So, but for you to answer this question, only only one or two sentences more than enough for you to answer this question. So, but you will have to read it. This exam has given you a text type question, essay type question. It's a 5-mark question. So basically, you will have to read it. But once you read it, there are a lot of irrelevant information in this question. So my suggestion is don't ignore last 3 questions, any paper, investment banking paper. Last 3 questions papers are very important for you can score a lot. Same thing we are doing. There were some questions whether is it what is your recommendation to issue floating fix? But that question was never directly asked. That question is not directly asked by the the examiner, but he has given a lot of information for you to read it, and that's the question they ask. So by giving a lot of information in the paper, in the question, and don't mislead. Read it and try to do this question in your exam as well. Question number, last 3 questions, generally students are not answering. Generally students are actually ignoring these last 3 questions due to the excessive text, due to the excessive sentences, due to the excessive essay type. So I have seen some questions, same question, every paper. This is similar to every paper, right? Every question paper, last 3 questions are essay type question. More information, more informative. But answer is very simple. Answer is very simple. So basically, please try to answer this question as much as possible, right? And this is the first time we have seen there's a question coming on project appraisal, right? Project appraisal, this is basically project appraisal is a accounting subject. But first time examiner testing project appraisal, they are giving you question number 8 and sub question number 4. They're giving some cash flows. Remember that we have done this in the class. They have given cash flows. I'll read it to you for you to understand. And I just want to give you an encouragement. Once you complete the syllabus contents, what we are doing in the class is more than for you to pass this exam, right? I'll read it to see. Net present value. Now we have learned this. Net present value is a method used to determine the current value of all future cash flows generated by a project. That we done it. Remember, project cash flows coming 1, 0, 1, 2, 3, 4, 5. And all these cash flows bringing to today's term for you to value this, whether this project is viable or not. Remember that we did it. Same thing, including the initial capital investment. So now say if you want to purchase a machine, you will have to spend first. Today you have to spend. So the year 0 you have capital or the cash outflow. Year 0 you have cash outflow. Now see the difference between project appraisal question and the bond calculation question. Same thing, but only the difference is what? Year 0 you don't have any value when you calculate the bond or debenture. You are finding the year 0 value for the debenture and bond calculation. But project appraisal, you are valuing what? You are evaluating what? Whether this project is viable for us to accept, whether this machine is okay to accept, whether this by purchasing this machine, whether we can continue, whether we can add value to the shareholders' wealth. So basically, when you make profits, ultimately, where do you add to the shareholders' wealth? So every transaction you do in a company, you do in a bank, ultimately should add value to the shareholders' wealth. That's what you expect. Anything you make profit, finally added to the shareholders' wealth, where equity, retain profit. So when you make profit, when you add to retain profit, equity means what? Shareholders funds, share capital plus equity, shareholders plus reserves. That is equity. So equity, reserves. Equity comprises shareholders fund and the share capital and the reserve. So the accumulated profit is one of the reserves. So adding profit means what? Ultimately you will enhance the shareholders' wealth. So understand the difference now, bond calculation and the project appraisal. Project appraisal, you have initial zero cost outflow. Remember we did it in the class. But bond calculation, we don't have year zero value. We are finding the year zero value. That's the difference, right? Now, including the initial capital investment, that's true. When you want to purchase a vehicle, when you purchase a machine, you have to initially spend. Year zero, we have our cash outflow. It is widely used in capital budgeting to establish which projects are likely to turn the greatest profit. You have several projects. Which one you select? How do you select? Based on the NPV. If the NPV is positive, you accept the project. If the NPV is negative, you reject the project. So the given below are the information relevant to specific project, which has a lifespan of 4 years. From the date of project initiation, the project cost of capital is 12%. It's given. Cost of capital is given. Cost of capital comprises of what? One thing is cost of equity. The other one is cost of debt. And also we have learned part of this part of the cost of debt, preference shares as well. But generally, basically, there are two components comprise cost of capital. That is cost of equity and cost of debt. So cost of equity, how do you find out? That is owner's cost. Anything you put into the capital, put into the company as capital, you are entitled to have what? Dividend. That is your cost of capital, cost of equity. Anything you borrow from the market, anything you borrow from the bank, you'll have to pay. That is your cost of debt. So once you add these together, when you weight it together, remember that we have done this in the class, weighted average cost of capital. Cost of equity we have separately calculated. How? There are two methods. Remember, I'm just refreshing you. One thing is dividend model. The other one is capping. Cost of borrowing, how did you do? What's the adjustment you brought? Tax adjustment. Tax has to be adjusted after tax. Only you have to take it for cost of borrowing. So once you have two figures, if this company comprises capital and the borrowing, when you have two figures, you can add percentages. You weight it. So out of total capital, how much the capital? Out of total capital, how much the borrowing? Then you weight it like treasury bill weighted average rate. So the how many primary dealers? We have 10. So the all 10 primary dealers put bids. But ultimately 3 months, 6 months, 1 year, central bank publishes only one rate. Successful bids coming from the 10 primary dealers are pooled together and weighted. Total model එකෙන් මෙයාගෙන් කීයක් ආවද මෙයාගෙන් කීයක් ආවද මෙයාගෙන් කීයක් you weight it and give one figure. That's why you have odd figures for treasurable rates every week, right? So now see, all those things are interconnected. All those things are linked together. So if you learn one thing, so it is connected to everything. Right? Now see, very easy, very easy. Cost of capital has been calculated for you. Examiner has given to you. Today, net cash flow minus 1,000. Today means what? Year 0. Now, year 1, 250 net inflow. Year 2, 350 net inflow. Year 3, 450 net inflow. Year 4, 500 million net inflow. So what's the question they're asking? Based on the above information, calculate the net present value of the project. Based on your NPV, state whether the project is viable or not. Show your calculation. How many marks? 5 marks. How much time do you want to complete this? 3 minutes more than enough. Maximum 5 minutes. 5 marks. Haven't we done in the class? We have done this in the class. Year 0 you have a outflow minus, then the all 1, 2, 3, 4 you have 200 cash inflows plus amount. So what do? You add. Then you bring all these cash flows into today's term. How do you bring it today's term? By discounting. What is the discounting factor? It's given 12%. How do you find out the discounting factor for 1 year? It's not available in your paper. Generally, I told you at the exam, present value tables are attached to the paper, but here you have to calculate on your own. I have given you the calculation method as well. 1 divided by 1 plus r to the power n. Easy. The 1 divided by 1.12. 1 divided by 1.12 is the answer for the first period. So the second period, keeping that answer on your calculator on the display, divided by that answer by 1.12 again. The present value for second period. Keeping that answer on the display divided by 1.12 for the third period. Easy. Then you multiply. That answer should multiply. That is the answer you are getting. එක රුපියලකට අවුරුද්දක් අවසානයේ value එක කීයද? එක රුපියලක් අවුරුදු 4ක් අවසානයේ value එක කීයද අන්තිමට එන්නේ? It is obviously less than 1 rupee due to the inflation, due to the cost of capital. එක රුපියලක් කොච්චර වටිනවද? Then you bring all those cash flows into today's term by multiplying the amount, the present value. Then you net it. Year 0, here the 1,000 outflow is year 0, always 1. Always 1. First period, 1 divided by 1.12 rolling up your hand. Here the cost of travel is 12%. So the easy calculation for you to answer the 5-mark question. Nothing. Right? First time examiner tested project appraisal in your exam. Right? In your exam. So we have been doing all these part for the students, and this is the first time examiner has tested you on this exam, right? So what you can do is sorry students, right? Now basically now see, these are the questions you can get it. First, I just wanted to give an encouragement. These are the questions you will have. You have and also one thing is repetition. Question. There are a number of questions which are repetitive, which have repetitive questions also. Now, once we complete the syllabus content, then we will be concerning more on the latest question paper. And now, generally, there is a pattern of coming repetitions as well, the repetitive questions. So, latest question paper, generally, you don't carry any question, repetitive question. But there is a pattern also will be noticed, and we have done this. And also another question. Now, see, and first question, that is now see this question. Columbus Stock Exchange. This is the first question, and sub question one or question number the high first question again comprises 10 questions, sub questions. The first question for 2 marks. Colombo Stock Exchange is the only equity trading exchange in Sri Lanka. That we know. Now learn from the question. Learn from the question. Now Sri Lanka, we have trading flow. Now this question paper, a lot of questions are on share market. Lot of questions are raised from share market. Why? Share market, now you know we have a separate minister for capital market. Share market is coming under capital market. We have learned. Remember the first lecture I gave you the diagram: money market, capital market, forward, derivative, and commodity. So the under capital market we have given some instrument. One of the capital market instrument is equity, shares. Shares. Basically, we have separate minister appointed for capital market development. So we can expect capital market to improve. What are the capital market instruments we have learned? Debenture is one. Shares is one. So the question is now this question is based on share market. Now see, Colombo Stock Exchange is the only equity trading exchange in Sri Lanka. Suppose an investor buys shares today. Now, when you buy from the share market, what market is that? That is secondary market. Where are the primary market? IP. Learn from this. The settlement of the investment happens on a later date. If you purchase shares today, you will not pay now. Assume today is Monday and there are no banking holidays during the week. When is the settlement date of the transaction? Monday you purchase a share, then when do you want to make the settlement? Same question this time can raise. If you have purchased a treasury bill, now say when is the auction? Every Wednesday you have auction, treasury bill. When is the settlement? After 2 days time. Provided that if you don't have any holidays, then you'll have to make the settlement on Friday. Similarly, here also the same. Won't change. But for you to purchase shares, there is no particular date. So the market, the share market is open every week, every day from 9:30 to, sorry, now today, now these days they have actually shifted to 11 a.m. to 2:30. During that time, you can purchase any shares any day. So the settlement is after 2 days time. So the 2 mark question, and also see what is not a component of capital asset pricing model. What they are asking. Another question. Question number 3. CAPM. Components of CAPM. Haven't we learned? Value at risk, risk-free rate, beta, market risk premium, right? And next question: which of the following activities not typically provided by the investment bankers? I have given you a note on the role of investment banking, right? I have given a note on investment banking. Which of the following method is not a suitable method to raise capital through stock market? Bonus issue, rights issue, initial public offering, private placement. Haven't we learned all these things? Bonus issue we haven't learned? Yes, we have. Right issue for existing shareholders at a discounted rate. Initial public offering, IPO, prospect issue, private placement. You privately you speak to the people and asking them to invest. That's private placement. That is not a involvement of share market. Now see this question. Now this is the third question and the sub question number 4. TPC PLC, a listed company. We know for you to be listed in the share market, I have given you listing requirement. For you to be listed main board, these are the requirements. For you to be listed in D07 board, these are the requirements. I have given you. And Empower board also have given you. Right? And also once you get listed, you have to comply with continuing listing requirement. Once you get listed, you can't refrain from anything comply. No, you have annual report has to be published. AGM has to be held. Directors appointment, directors removal, directors change has to be informed. Right? All these new projects has to be informed. Now all these things, what do you expect? You are expecting the transparent. How do you call in banking terms? You know, maintaining the transparent in a company. How do you call? Which one you maintaining? Corporate governance. Now see the word corporate governance. Now corporate governance are very much there in the companies which are listed. So that's why people like to invest in listed companies. They have a faith on it. They have faith on it, right? Now this question, now see it. TPC PLC, a listed company, is looking at various sources of financing available to fund one of their future projects. Listed company at the end, මේ listed company බලනවා various methods කොහොමද සල්ලි හොයාගන්නේ කියලා. What are the methods? We have learned listed company. One thing is they can issue new shares, all listed. Other one is they can ask existing shareholders to put money. What is that? Right issue. Otherwise, they can issue a debenture. Otherwise, they can borrow bank loan, borrow from a bank. Many sources of finance. Now see, and there are various looking at various sources of financing available to fund one of their future projects. Management and the board of directors decided the best method of financing the project is via right issue. So they have selected to go for rights. Right issue is what? Right issue is asking existing shareholders to contribute at a discounted price. Right? Remember when we are doing the right issue, there are 4 things you can do. You can subscribe fully. You can subscribe for half or a part. You can ignore it. You can sell it. You can sell it. So basically, if you remember that the share dilution, share percentage, the shareholding dilution also we discussed. If you don't subscribe the entire entitlement of the rights, you are losing your controlling percentage. Remember that we have calculated the question and justified, right? If you don't subscribe means company anyway issuing. Somebody is there to purchase. If you don't subscribe, meaning you are losing. You will be having the existing share percentage shares, but you won't have new shares. But the company will sell it to somebody else. So ultimately, company will be issuing entire right issue. So the share capital, number of shares will be increased by with the new total rights issue. So, but you are holding the previous amount of shares, but you have not applied for the new entitlement. You can do that. you can sell it. Rights are traded at share market. You can trade it, you can purchase it, you can sell it. Rights. Okay. Now they have selected to go for rights issue. And right issue also we have learned. Remember the theoretical ex-right price. Remember, and the value per rights also we have calculated in the class. Company is confident that the rights issue will be fully subscribed, given the track record of the company. The company on the company, and so the people will subscribe, people will purchase. Who are the people? Who are here the people? If you are not an existing shareholder, can you apply rights? You can do that. You can purchase from the market, but the only thing, the entitlement is given to whom? Existing shareholders. Once you put it into the market, you can purchase. No worries. Company is confident that right issue will subscribe track record company. TPC is, that is the company's name, right? Currently trading at 50 rupees. And tomorrow is the X right date, that is without rights. So remember that we did it ex div, that is without excluding dividend. Excluding dividend. X right means without X, without right price, right adjustment. Rights are traded at 40 rupees, and the ratio of one right for every 5 shares outline 2 advantages of right issue as a source of finance. මොනවාද වාසි right issue කරපුවාම? The two, that is, there are 2 parts of this question. One is, what are the advantage of right issue as a source of finance? Right issue කරපුවා මොකක්ද තියෙන වාසි? You are asking for whom? Existing shareholders. Existing shareholders will subscribe, so they won't lose their shareholding percentage, and the share dilution won't happen. And also the existing shareholders can get a discounted price lower than the market price. Now here, rights are issued at 40 rupees. What's the market price? 50. So the trading at 50 rupees. Now the rights going to be issued at 40. What's the percentage? 1 for 1 new share, 1 new right for 5 shares. Second part of the question, they are asking, based on the information provided, calculate the theoretical X-right, theoretical expected share price after the right issue. Show your calculation. So that's the question. So that's the question they are asking. So and also based on now they are asking, this time they are asking calculation on weighted average cost of capital as well, right? Same question. Now I have the ready queue. Question number 3, fourth part. Part 3 they are asking weighted average cost of capital. We have done this in everything in this question paper. We have completed in the syllabus contents, and we have done everything. We have covered everything in the class. So my request is, go through only the notes which I have given to you. You have enough spare time, you can read whatever the additional reading, but I am recommending you to read whatever the tips, whatever the notes I have given to you before you go to the exam. Right? So don't go without studying. So all those things we have done this in the class. Right? Comparatively easy question paper. Comparatively, then that's what we expected also. People have lost 1 year almost, so you should not penalize the students, right? Asking difficult question, but you can pass the exam easily. So even you get a difficult paper, you can pass this exam. This is an optional subject, and so concentrated whatever the notes provided you can pass this, right? Now see, other than the customer deposits, state 5 alternative methods that an investment banker can help a bank to raise funds. So what is this? Role of the investment bank. So wherever, whatever the question you take it, we have that in the class. Now today we are going to do this M&A. There was a question. Question number 4 is based on the mergers and acquisition. Briefly explain what is due diligence audit. Outline 3 importance of due diligence and M&A. M&A means mergers and acquisition. Briefly explain 5 common valuation methods used in M&A transaction. That's a 5-mark question, repetition question. Repetitive question. Same question was tested previously as well. Valuation methods. So how do you value a company? Right. So easy question paper, right? You can easily pass this question. Right. Now today we are going to start it. Mergers and acquisitions. I have uploaded note for y'all. And what is this? Now remember again, this is an accounting subject, but this has more relevance than the foreign exchange. Now mergers and acquisition. What is a merger? Merger is you get together. Companies දෙකක් තියෙනවා, you get together. හැබැයි මෙහෙම එකතු වුණාට පස්සේ අලුත් කෙනෙක් තමයි එන්නේ. Both the existing companies will go wrong. No more existence for the existing companies. New one comes. That is merger. You get together. What do you mean by acquisition? You go and acquire. අයිති කරගන්නවා. ඔයත් ඉන්නවා. අයිති කරගත්ත කෙනක් තියෙනවා. Both the companies are existing. Both the companies are existing. So understand the difference. Merger කියන්නේ companies දෙකක් ගත්තොත් දෙක එකතු වෙනවා. එකතු වෙලා අලුත් කෙනෙක්ව හදනවා. So the එකතු වෙච්ච දෙන්නම නැති වෙලා යනවා. That is merger. Acquisition means you go and acquire. ඔයත් ඉන්නවා ගිහලා තව කෙනෙක්ව අයිති කරගන්න. දෙන්නම ඉන්නවා. That is acquisition. So why do we want to learn? So every question, every syllabus topic, when I started to teach, I'm asking the same question, and you should know why we are learning this. We are studying investment banking. So why we are learning? If you go through the role of investment banking, this is one of the roles. Mergers and acquisition. Remember? They are one of the roles. They're helping. So say there are 2 companies you want to merge. You can't do it on your own. You basically appoint either independent auditor or the investment banking division, investment banking company to undertake. So they are the people who are doing this. Now when you acquire a company, it is not an easy method, easy thing, right? When you acquire a company, when you merge a company, you have to value this company. Before you value, you should know everything. How do you get to know everything? You should know everything. On this acquiree, අයිති කරගන්න කෙනාගේ, අයිති කරගන්න යන කෙනාගේ හැමදේම දැනගන්න. How do you get to know? By doing a due diligence audit. This time a question. Briefly explain what is due diligence audit. That's the question. So basically, when you are acquiring a company, when you are merging with another company, you should know everything on the other company. How do you get to know? By doing a due diligence. So there are few steps I have given in this, not this one. I previously I have given due diligence. Right? I'll give you not given. There are steps for you to do due diligence. I'll be giving that, right? So basically, I think there was a additional note I have given to you. There, it's included in the due diligence, but I'll be anyway giving a separate note on that as well. And post and pre-acquisition methods also available. That note. I have a new. After this, I have another new tube for you to give. And same question was tested this time as well. Right? We'll be discussing later. I'll give you. Now, understand the difference between examiner has not tested the difference between merger and acquisition. So, right. Since the new syllabus started 2014 September, not tested. Even for 2 mark question, not tested. Multiple choice question, not tested. Acquisition and the mergers. Mergers, remember, the two companies get together and now this question, A and B, you merge. New company comes C, but A no more, B no more. Acquisition, company X and Y. Company X acquire करना Y. Company X utino, Y thing. Both are there. So now see, when your bank, when you go and see your bank's balance sheet, when you go and see your company's balance sheet, there you have company column or a bank column, then you have another column called group column. Have you seen this? Group means what? Apart from the parent, you have many subsidiaries. Now, so see the word. When you acquire a company, when you go for acquisition, you have two things. One thing is parent, the other one is subsidiary. Acquiree and acquirer. IT කරගන්න යන කෙනා IT කරගන්න යන කෙනාට අපි කියනවා acquirer. Parent. කාවද IT කරගන්නේ? That is acquiree, become a subsidiary. Parent subsidiary. So when your bank's balance sheet, parent is your bank. This is commercial bank, that is commercial bank is your parent company. But if you have a subsidiary, parent is financial, the subsidiary of commercial bank, that is your subsidiary. But when you preparing accounts, so the group account comprises parent plus subsidiary account. So the subsidiary, for you to become a subsidiary, you should have, the commercial bank should hold more than 51% of shares. කෙනෙකුට අයිතියක් හම් වෙන්නේ යාට 150ට වඩා වැඩිපුර ප්‍රමාණයක් අයිතිලා තිබුණොත් තමයි, right? So holding more than 50%, then you can maintain the controlling power and control the company's affairs. But remember, examiner has not tested this as well. Acquiring shareholding percentage is not the only factor for you to become a parent-subsidiary relationship, or to maintain parent-subsidiary, or to have parent-subsidiary relationship. Parent-subsidiary relationship එක ඇති වෙන්න එක හේතුවක්. 50ට වඩා අඩුවෙන් තියෙන කම්පැනිස් වල වුණත් එක කම්පැනි එකකට පුළුවන් නම් අනිත් කම්පැනියේ බෝඩ් එකට වැඩිපුර ප්‍රමාණයක් ඩිරෙක්ටර්ස්ලව දාන්න. So basically you are controlling. Who controls the company on behalf of the shareholders? Directors. අපි මොකක් හරි කම්පැනියක් තියෙනවා මට අයිතියක් තියෙනවා ඒ කම්පැනි ඩිරෙක්ටර් බෝඩ් එකේ ඩිරෙක්ටර්ස්ලව දාන්න. So basically I am controlling that company. I don't have 50%. But still you can have it. You can have it. So there are many criteria for you to be satisfied. Not exclusively, you should hold 50%. 50% කියලා කියන්නේ අපි සාමාන්‍ය screening. අපි සාමාන්‍යයෙන් ගලු බලවට කියනවා 50% වලට වඩා වැඩි නම් ඔයාලට මේක අයිති කියලා. Right? සාමාන්‍යයෙන්. So then parent subsidiary relationship basically coming to acquisition. Right? So then you have a group account. Group account is what? Parent and the subsidiaries. That is. Now there are two methods for you to have parent subsidiary relationship. One thing is direct acquisition. Other one is indirect acquisition. Direct acquisition, indirect acquisition. You directly go and acquire සාමාන්‍ය කම්පැනි එක කැමති නෑ තව කෙනෙක්ව අයිති කර ගන්නවා. තව කෙනෙක්ගේ යටතට වැඩෙනවට සාමාන්‍ය නම් කම්පැනි එක කැමති නැහැ. එනදී අපි විකුණනවනේ. By acquiring shares, you become a victim of that company. දැන් ෂෙයා මාකට් එකේ තියෙනවා ජෝන් කීස්. The company listed company. මම ඔගේ ෂෙයාර්ස් මම පුළුවන් තරම් ගන්නවා. විකුණනයි තියෙනවනේ. අපිට ඒගොල්ලෝ ෂෙයාර්ස් දාලා තියෙනවා නම් එළියට. මම ඒක කොහොම හරි අපි කියමු දැන් මේගොල්ලෝ සාමාන්‍ය 20ක් දාන්න ඕනේ ෂෙයාර්ස් වලින් ෂෙයා මාකට් එකට ෆ්ලෝට් වෙන්න. Otherwise there is no shares to buy. This is floating. We are holding a floating, free float. අපි මේ කම්පැනි දාලා 60ක් ජෝන් කීස්. Example only, right? 60ක් දාලා දෙනවා shares market එකට. They needed capital and they have issued shares to the market. මම මේ කම්පැනි shares හිමි ගියලා 50ට වඩා ගන්නවා. Now can John Keys prevent me buying shares? They can't. අපි ඔයාලගේ shares තියෙන John Keys එකේ මගේ price එකට ඔයා කැමති නම් you are selling me. Nothing to do with the company. Nothing to do with the board of directors of John Keys. The transaction between you and me. තව කෙනෙක්ගේ shares තියෙනවා නම් මම ඒ shares ගන්නවා. මට ගන්න පුළුවන් shares. So freely you can purchase, sell. Yeah, market. So nobody can prevent me buying shares. If you don't like to sell your whatever the entitlement to me, whatever the share percentage to me, that's a different story. But nothing to do with the don't just want to issue shares to the market. They don't have control. They'll have to maintain only the share register. You are shareholder, other mom shareholder. They have to maintain. That's all. So that I can become a shareholder. I can become a controlling shareholder. Even you purchase one share of John Keys, you become a shareholder. Take a share, you are a shareholder. You can go to the annual general meeting and vote it. If it is voting shares, you have purchased. You can get it dividend. You should be informed all the changes as a shareholder. You are one of the owners. Even you purchase one share, you don't have a controlling stake. That's a different issue, but you are owner, right? You are owner. So I am not buying directly. Now here, I have directly purchased John Keys shares from different people. That is direct acquisition. කොහොම ගිහිල්ලා මම 50ට වඩා ගන්නවා shares. Then I become a major shareholder of your. I say that if you will do my so I become the major shareholder. What is that? That is direct acquisition. I purchase. තව එකක් තමයි මම ගන්නෙ නැහැ ගිහිල්ලා. But I have another company which is owned by me. I have another company. මගේ company එකක් තියෙනවා තව එකක්. That company goes and buys shares from the market, John Keel shares. So the two people are buying now. I directly buy to my name and my company, which is owned by me. This company also purchases shares of John Keel. What happened? I purchased personally, my company purchased personally. So who controls my company? It's me only. Ultimately, both the people are the same. So I'll be controlling John Keel's affairs through that company. What is that? Indirect acquisition. So the indirect acquisition. මගේ direct shareholding percentage එකයි අර company through මට අයිති වෙන ටිකයි. ගත්තොත් ඒ දෙකේ percentage එක more than 50% නම් I'm obviously controlling the affairs of the. That is indirect acquisition. සමහර වෙලාවට John Keels කැමති නැහැ. මම මේ shares මේක acquire කරගන්නවා. So these people, sometimes John Keel doesn't like me acquiring shares. They don't like me to become a controlling shareholder. They don't like it sometimes. There are companies. They don't like somebody to acquire. So they have two methods. I'll be giving that note. Post and pre-defensive mechanism. That's a question examiner tested this time as well. Pre-acquisition defensive mechanism, post-acquisition defensive mechanism. I'll be giving a note on that. You just read it. Those are not English words, but sometimes those are English, but very difficult to understand. But you keep in mind, and I have explained with a one sentence, then you can easily understand. Right? I'll be giving a note on that. Pre and post defensive acquisition. Sometimes they don't like. Now remember, I don't know whether you can remember, Sampath Bank was to be acquired by Sasan Group, Harijavardhana's group, but it was declined. It has not happened. So they don't want to do that. So a lot of things are happening in this business world, right? If you know that this company is performing well, anyhow you are going to acquire. Now see, if you see this commercial bank and HNB, who is the largest shareholder? The government, right? The largest shareholder is the government. So they only appoint the chairman. How have they done this? Through EPF. EPF is not a direct government. EPF is owned by the government, but EPF is controlled by the government. But that is what? Indirect acquisition. Government does not go and directly purchase. No, they have not gone like that, but they have used EPF to acquire. Who controls EPF? The government. So ultimately, that company controls by whom? That is indirect acquisition. Classic example. You go and see commercial bank shareholder list. Available in the annual. The major shareholder is government institutions. So the government institutions are controlled by the government. Obviously, the company will be controlled by the virtual government. Indirect acquisition. You can't see this. So basically, for you to become, that's a question examiner tested once. For you to become a subsidiary, what's the shareholding percentage? It's more than 50%. But remember, shareholding percentage is not the only criteria for you to maintain the controlling stake. There are many, appointing more directors, appointing or removal or appointing more directors on the board, or otherwise you can control the company affairs, right? Basically, you are controlling that particular company's affairs, right? And there's another term we call it associate. There are three types of investments. When you acquire share, now say you go and purchase shares of John Keats, 1,000 shares you are purchasing. That's an investment. That's an investment you make. You go and purchase shares, 50% of the total issued share capital, a company's total issued share capital, 50% you acquire. Then you are the parent, John Keats become a subsidiary. You acquired 20% of the issued share capital. 20% is the significant amount of shares. If a company get 20% gonna significant. That is what? Associate. You become associate. That company, that if you purchase 20% of the issued share capital of John Keats becomes the associate company of you. You are holding more than 20%. So the more than 20% you are holding, that is an associate. You are holding more than 50%, that is a subsidiary. If you are holding less than 20%, it's an investment. Now these are the three things. Investment, less than 20%. If it is 20% you are acquiring, that is we are the associate a company. If you are holding more than 50%, that is that the acquiree become a subsidiary company of yours. Understand? Understood? Basically, direct and indirect also remember, not tested. When doing questions, are taking that relationship with your direct, indirect. If you complete more than 50%, you become a subsidiary. So when you become a subsidiary of another company, then you will have to prepare a group account, consolidated account. So when you go and see the balance sheet of the bank, group account or the consolidated column, it represents parent and the subsidiary. So where do you represent an associate? Associate companies, so we don't amalgamate. And if a company belongs to you, when you're preparing accounts, group accounts, you add together all assets, you add together all liabilities, you add and present as one group company account, group account. But if it is an associate company, it is not controlled by you. You're only controlling 20%. So basically, you take the share of profit to your parent company. That's all. 20% profits tika vitara you are IT company. Ekoya penano ya parent company. Your bank account. That's all. That's a treatment. That's the accounting treatment for associate. So associate, now say when you become a subsidiary, when you parent subsidiary relationship, when you acquire a company which is a subsidiary, we call it a controlling stake. You are maintaining the controlling power. But if you purchase 20% of the shares of a particular company, that's an associate. So remember the word, you are maintaining significant influence. That's the word. If the examiner tests you, you are maintaining a significant influence of this particular company. How do you call that? Then associate. If you purchase 20% of shares of a particular company, you are maintaining a significant influence. meaning it's an associate. It's an associate. Oh, it's an associate. So if it is an associate, we call it a significant interest. Significant interest. Right? So to understand the concept clearly, then you won't forget about it, right? And this question, question number 4, is basically they ask the same type of question. They ask the valuation methods. Valuation methods only asked, right? We haven't come to that point. Right? Now understood the concept. Only thing understand the concept. Right? And remember this one. This one. This is important. Reasons for merger. Why do you want to get together? This has been tested not in your exam, financial market operations. Have taken that this part from that question set. Right? Merge reason for now. Remember when you are studying the tubes, all the considerable, all the contents are very much important, right? Don't drop any part. Just keep in mind. Right? Reasons for mergers, that is important, right? So when you want to acquire a company, when you want to acquire a company, you should know everything on that company. Generally, you don't publish price sensitive information. सामान्य पे आपको information publish करने, you don't do. What the job when you're working somewhere, something internally happens. There is some union action going on. There is some management changes to be taken place. But you don't disclose it to public, do you? You don't. It is not necessary for you to disclose to the public the internal affair. You don't disclose. You don't have to disclose. But when you go to acquire this particular company, you should know everything. You mean the acquiree, acquirer, parent. Once you become a subsidiary, only parent subsidiary relationship, but for you to understand, IT Karagan Kena has to know everything on the acquiring financial information. It's available in the accounts. Non-financial information, litigation, then the legal actions taken, labor disputes, tax matters, everything, qualitative, quantitative, financial, non-financial, everything has to be diagnosed. Everything has to be good to know. So what do you do for you to get to know? Due diligence. So basically the acquirer doing a due diligence of the acquiring. Due diligence means diagnosis test. You test everything. The whole body is to be diagnosed. Then you can identify These are the litigation to be won. These are the labor dispute to be happen. So there are some problems which are not reflected in the accounts. When you decide, is it worthwhile for me to purchase this company? So basically, due diligence process is a diagnosis test. You diagnose everything, financial, non-financial, qualitative, everything on this particular company. Then you decide who does this. Generally, independent auditor. Generally, independent auditor does this, right? Generally, independent auditor does this due diligence audit, right? That is also important. Due diligence audit, right? And also remember, when you are now, now how do you decide the price? When you are acquiring a company, say now you want to acquire company X. Now, for example, now you want to acquire John Keys. You want to acquire. You are meeting the board of directors and you are giving the pricing. That pricing, that price, we call it purchase consideration, not test price. Purchase consideration. So the purchase now say now how much do you value now John Keys? How much do they value? What is the valuation of this John Keys? Straight away you can get a screening shot where you go to the market and see what is the share price now and multiply the total number of shares issued, then the valuation. Screening, basic valuation, you have a kind of idea. This is the valuation. It should be more than that anyway. Why? The goodwill is not accounted. Whatever the trade, the patent and all this, no, not allowed. So generally, goodwills are not accounted. So basically, the don't kill goodwill, you have to add value. When you sell a company, you are maintaining a goodwill, then you have to add value. There are methods done by the auditors for you to add monetary value. Goodwill is not a monetary value, right? And the what do you call the workforce strength, experienced work staff. You can't value this valuation, the valuation of experience value does not reflect in accounting. Human resource valuation accounting, but you have to add value. You create a value and you want to sell it, you put that. As a buy. So that's why you need independent auditors valuation. But goodwill, human resource capital part is not reflected in the share market pricing. That is basically demand and supply. Net present value does not reflect that one. Accounting, you don't include goodwill and this one, experience, human resource capital value, you don't put it. So basically, auditors are doing the valuation as well. Then auditor gives you, this is the purchase consideration, this is the valuation, this is the value per share if you want to purchase this particular company. That's the valuation. So if you are satisfied with this purchase consideration, you can purchase. So the valuation methods, there are a few valuation methods. One thing is net asset value. Equity divided by number of shares. What do you mean by equity? Or the net worth. Similar word for equity is net worth. Total assets, balance sheet taken total asset minus total liabilities. Then you will be ended up with what? Share capital plus reserves. That is equity. That is net worth. Belongs to whom? The owner. So making profit, you add value to the shareholders' wealth. Valuation goes up. If you make losses, what will happen? No value. The amount you put as capital also can be eroded. We have a separate topic, capital restructuring. We are actually doing the capital restructuring for the companies making continuous losses. How do you turn around the companies? You'll be learning there, right? Turn around the company. Basically, net worth divided by number of shares issued, that is per share value, comes. That is one method, net asset. The other one is replacement cost. The other one is what? Free cash flow. Same thing we are learning for this project and previous. Cash flows, and you brought it down to this term. For you to not, you don't want to understand, you don't want to learn this accounting principle in depth, but only thing examiner tested, and this time also tested, latest paper also tested the valuation techniques. That's all. You should know valuation technique. Replacement cost, net asset value, and free cash flow. Those are the three methods for you to be remember in mind. Keep in mind. Valuation technique means what? How do you value a company? How do you decide the purchase consideration of this particular company? These are the methods used by the auditors. You are not an accountant. You don't want to go in there. Only thing, remember the methods. That's all. Remember the methods. That's all. Right. So this question they are asking outline three importance of due diligence in M&A. Now you can think and write. You don't have any notes. Due diligence, you know what is due diligence. You can think and write. There is a specific answer, and also remember this in the examination paper. Provide precise and direct answers with suitable examples whenever possible. Precise, direct, and precise answer. Meaning is what? If you don't know means don't know. They're not expecting lengthy answers from you, right? Even for 5 marks. Sometimes one sentence, two sentences more than enough for you to earn 5 marks. Right? But if you know the subject, that's the maximum mark you can earn. You can easily earn maximum. Don't write too much. The examiner, under the instruction to the candidates, specifically says they have bold highlighted it. Provide precise and direct answers with suitable examples whenever possible. So then, by giving an example, even the examiner does not ask you if you can provide a example. At least you are giving examiner to say that I know this, then he will be happy and try to answer much as possible the easiest question. Then you have made a good impression on you in the examiner's mind. Sitting here as a matter of the native of the Tibet for years. At least at least we can pass this exam, we won't pass this exam. If you want to try for a prize, then you'll have to go for a little harder. But if you want to pass this exam, what 6 marks is anyway gettable? Can be. Has to get. Right? So this is a very frequent question exam test to each and every exam you have this mergers and acquisition question. Mergers and acquisition question, right? And also remember another terms. So basically we are learning the terms. There are three types of acquisition method, that is horizontal, vertical and conglomerate. So the horizontal mean, and also there is another one I have given this to you, forward integration and backward integration as well. So basically horizontal integration means what? You acquire a company in the same line of business. You acquire a company in the same, now say, you acquire, you are John Keels. You John Keels super. You are Silk Keels. You are say you Keels super acquire Apico super center. Like same line of business. Same line of business. But and horizontal means, and vertical means now say now you are the milk, fresh milk. Take the example of fresh milk provider. So what does the carriers do? They actually sell it to the end user. But do they provide? Do they produce? They don't produce. They are purchasing from producer. That is what integration. Integration. That is a vertical integration. Conglomerate means the like John Keel, that is conglomerate. You get together everything. You have many companies, many different fields, many different operations under one umbrella, right? So that is important. So also remember the terms for you, right? And now see these things you can read it. This one I have taken from a foreign examination. Target company means what? Acquiree. The company is going to be company is going to be acquired. That is acquiree. The who is going to acquire is acquirer. Now this one, horizontal, vertical, and conglomerate. Right. I will give another with the example of vertical merger. There are two methods: forward and backward integration. Right. Important things, right? This one. And this is the form of an acquisition stock purchase. Basically, you acquire shares of this particular company. And method of payment, how do you settle the purchase consideration? How do you settle it? It can be either shares, it can be either cash, or whatever the forms. It can be either thing, depending on the discretion of the buyer. Depending on the discretion of the buyer. Right? Depending on the discretion of the buyer. Now this one is friendly merger. Friendly merger and hostile merger. Now friendly merger means you like to be acquired. But hostile merger means you don't like to be acquired. So there are methods, defensive method, pre-offer mechanism and post-offer mechanisms. I have given you examples. How do you avoid How do you avoid a takeover or acquisition by another company you don't like? Then you have pre-offer. And once you get acquired, another methods also available to you, post-offer. Just read it, test the examiner. These are the reading mechanisms, right? This one, this is due diligence now. These are the methods, right? Everything you go to available here, right? Financial, non-financial, everything you. Right. And also, before we come into the corporate restructuring, I have another one. Just these are some questions taken for you to refresh your knowledge. Just go through it, what we have done so far, right? These are the possible questions examiner can test you. Sort of giving some questions to your. Let's go through that is one thing. And also understand these are the examples. These are the examples of acquisitions, right? These are another question, set of questions. So basically, this is example, and this is questions. Just go through this. Let's go through this, right? So any question you have? So basically, we will be not touching a capital restructuring part. That is the final part under this syllabus. We'll be taking that part with you later. For restructuring part, so that is I'll be taking later with you. I'll be taking later with you. Any question you have before we wind up? And also, I just wanted to tell you now. Understand the this is a part from today's session. Understand the circular issued by Central Bank of Sri Lanka to maintain exchange rate. Since we have completed last week exchange rate scenario. Now, last week they have published the exchange rate on exporter. Only thing you need to know why the central bank has published this restriction on export proceeds. So examiner can test you. Now this time a lot of questions are based on the share market because share market was booming. It has reached to 9,000 before this question paper was printed. It has reached to 9,000 and later it has come down drastically. But we were the best performing share market. So basically, we can think about examiner test you the latest information from you. A lot of questions based on the share market, right? And so we thought of actually now this time, a lot of people are talking about the country's exchange rate. But when you are actually doing the exam, when you are sitting for the exam, exchange rate may be the hot topic. So towards the exam, I'll be taking some questions based on the recent control government has implemented to have the stabilized exchange rate as well. So I think that there may be a possibility. It is not directly relevant to you, but examiner can test you since you have to learn proprietary trading subject, that is basically foreign exchange. So we'll be taking some more few question based. What actually now these things, of course, some exporters proceeds have to be brought down to Sri Lanka. That regulation was anyway there. Within 180 days, you have to bring down the export proceeds and convert 25% of the export proceeds to rupees was not there. Recently only they have implemented last week. Right? So to build the reserves, general reserve. So that is for your purpose, that is for your knowledge purpose as well. That is important. So later we will see what will happen when you go to the exam. There may be some changes to this regulation. So then no need to learn now. For the time being, for your knowledge, you just learn it. Keep in mind what's happening, what's happening, what are the control brought by government of Sri Lanka to have a stabilized exchange rate. Right, and you know there is ISP international sovereign bonds, not international sovereign bonds, not tested this question paper. Right, that is a very another hot topic. There is a sovereign bond to be settled July 27th. So I think your exam is before that. So examiner can test you kind of things, on ISP actual. How do you do this? We'll do that. Will at least now there was a question on options which is not relevant to you, 2-mark question, and there's a first sub question of first question, and you have to write it. Now this question paper, first question comprises of 10 sub questions. Now last 2 questions, this paper also you will have to write it for 2 marks. 8 questions only you have to select out of 4. Out of 4 you have to select 1, 8 questions. But last 2 questions you have to write it. You have to write a 1 sentence or whatever. There was a question on the European option. You have to write it. So it's available in a note to test. There is a possibility of testing. So at least for 2 marks, then you can score it. So we will be doing later towards the close of the exam. So we can then think about what are changes to be happen on this restriction. So any question before we wind up the class? So basically we'll be starting the capital restructuring next week. So then you can think of, then you can move into the other topics. So basically we actually almost complete the syllabus. And attempt this latest question paper I will be anyway taking with you all. I'll be taking the essay type question. Then I want to give you some kind of encouragement to attempt this kind of question. Any question you have before we wind up? Right, then we will meet up next week, so that we can finish off this mergers and acquisition session. Right? Thank you very much, students.